Tracking metrics. All right, so what we will track. These are the most important metrics we want to track, though you can get as detailed as you want here. So asset name, date, whether we went long or short, our trade size, our entry price, exit price, whether it was a win or a loss, our maximum favorable excursion, our maximum adverse excursion, and our profit and loss from the trades. Maximum MFE and MAE stand for maximum favorable excursion and maximum adverse excursion. This is how far the market moved in your direction and against you once you entered the market. These are very important metrics to track that will help you adjust your stops and profit targets over time. Something else that I recommend as well is using a tool on your chart to mark where you ended. So whether it's a swing trade that's over the course of 3 days or whether it's a day trade, is to mark all of your and if you have a trading service, or not a trading service, but a platform like Sierra Chart, and I'm sure some of the other ones do it as well, is to where you can actually, especially if you're trading from the chart, is to mark those entries and mark those exits. And it really, really gives you a good visual representation of what happened. And for me, that allows you to go back and then you document those, right? You save pictures, whether JPEG or PNG of each of those charts every single day, and you add that as part of your journal. And it really, really gives you a good visual of how well you took advantage of the day. And that's why having that picture along with your journal, to where you can go back and look at, emotionally what you were thinking, what you saw, and what you were thinking around the time of entry and the time of exit. And then you can look back and say, okay, well, did this line up with what I see now after the fact, right? Because everything's super objective after the fact. Plus you have hindsight, so you got to give yourself a little bit of grace there, that it's like you're trading in the moment. But you look at it and be like, was there anything major that was that you were definitely off about when you were trading it live? And to figure out why that was, and then to make those little tweaks or adjustments, especially if you see those things come up consistently, right? All right, so backtesting example. So besides the core metrics you will track for each strategy, the additional data you track should be specific to that strategy, whether it's reversion to the mean or momentum breakout, for example. All have their own nuances and risk profiles. Make sure to individually test each part of your profit-taking plan. So an example, the table below was created for a breakout strategy in which tracking momentum is very important. Tracking how often it happens, how far it runs, and finding a way to participate become imperative before we devote too much time to an idea. So these are some of the metrics that I tracked for this specific strategy, and you can tell by some of the wording that it was a breakout strategy, right? And so what I did is I went through each day, right? And so you see the dates over here, whether or not it was greater than, like this one's greater than 20. It's actually the less than symbol, but as far as the move went, because then I was able to use this and then create an equation, and then I was able to gather the data from each one of these points to give me a specific percentage as far as how, which I don't have listed here, but as far as how often something happened, right? So then you get a breakout, you get your maximum favorable excursion that happened, your maximum adverse excursion that happened here, and then whether or not it hit the 1 SD or the negative 1 SD, and then pull back to the SD1, right? And then over here, I kind of had some definitions is what I meant. So by successful, PB1 means makes a new high or low after pulling back to the standard deviation, and by broken 5 minutes, so by 5 minutes trend successful, I mean trends break market structure, but then reverses to hit at least the first target, right? So it's good to have definitions to use for specific things that you set up, different rules, triggers, and then so like here, this was just a note, right? So this general notes, and then also there was specific notes for things that happened on those days. But again, you can see the breakdown here of kind of what it looks like. This is just an example of how one specific one was broken down. All right, so a forward testing example. So this was one of the first spreadsheets I put together for my live trading. You can see I added additional metrics to track performance, and in my opinion, additional data can only help and never hurt. So as you look for areas of weakness and strength in your trading. Once you are really dialing in your strategy, adding fees and slippage are important to track as they have a very real effect on overall profitability. They add to your losers and take away from your winners. So as before, where the first example was essentially a backtesting example, right, of it not just backtesting a strategy that I was already using, but just backtesting an idea, right? So come up with a thesis, trade thesis, be like, okay, well, all these charts that I'm looking at, it looks like that the breakouts tend to be successful, or at least have a certain period of time, or a certain maximum favorable excursion that I can make money from. So we take that, create some parameters, right, and some rules, and like I did was I tested exactly how far that maximum favorable and adverse excursion was, and then I said, okay, based on these metrics, if a trade is triggered, how can we break that trade down and make it profitable? How can we make it more profitable? How can we limit our risk on it? Does the risk reward of each trade tend to be skewed to the upside? And then if it does, and it seems like we have an edge there, then we can build some sort of trading system or strategy around that, right? So for this forward testing, this is actually, this becomes your live trading, right? So like I mentioned, when you're live trading and once you have a strategy that you've thoroughly back tested and you know has a potential to be successful, then that's where you want to add in like the fees and the slippage, and those metrics will allow you to really see, okay, does that diminish it's always going to diminish your edge, but does it take away your entire edge, right? Once you add the fees and the slippage in there, because they add up a lot over time. And so when you look at things without that, kind of blind to that, and you also give yourself a little bit more of a positive edge of how well you think that you're going to enter the market, instead of giving yourself less grace there, and you should actually make it worse. Let's count for that. If you can give yourself a crappy entry, plus you add in fees and slippage, and you're still making money, then you're onto something, right? So let's take a look at this one. So the YM, so that's the Dow Jones futures market. This is 2014. This is early in my futures day trading career. And so let's take a look at what we have. So we have market, we have the date, we have whether we went long or short and how many contracts, right? Time of entry, the actual entry level, right? How much we measure our stop and exit. So you can see there's already some signs of things that are definitely on the amateur front here, as far as like our stops should definitely not be the same exact one every time. I was only trading one contract, so I probably wasn't trading with a large enough account size, or just I wasn't willing to risk anymore. I was, that's all in, all out, so I wasn't able to be flexible in my approach at all, right? So here we go. So we got points. So that goes by points, right? So I think the YM was 5 points or $5 a point, right? So 26 points is how many we won, which translates into $130 profit. And then this gets calculated. We're able to use this to calculate these specific metrics over here, right? So our win percentage, right? How many times we won versus how many times we lost. And then you have a break-even category here, how much our fee was for the trade, and then our balance, right? So yep, so you can see right here, I'm trading the futures with a $3,500 account, and but again, I was keeping my risk limited, right? This is still higher than what I preach now, but again, that wasn't bad for the beginning, so that definitely kept me alive in the long run. And then I had I tracked my trade, my return on my ROI. So I would say probably ROC, return on capital, makes more sense than return on investment. But either way, you can see, so my wins, right, 3 and an eighth, right? So 3.8% versus a negative 0.3%, right? So this is all positive, right? And so we can see here, net profit, right? When you focus on keeping your winners bigger than your losers, then it's often that you can maintain a positive price trajectory, right? And so what we look at here, and one of the biggest things is look at the fees, right? So these are several days of trading, right? Net profit of $467, but $277 of fees were eaten up in that, right? So that was closer to $700 or $800, and so that's a very, very real percentage. That's huge, right? So you need to be trading big enough to where this number becomes more of an inconsequential thing, right? Otherwise, it can literally eat up every last cent, right? And especially you have one bad trade. If I had one bad trade, cut that in half, I mean, it becomes 50% of your account earnings, right? So anyways, we have, so trade number, track the trade number, how many were wins, how many were losses, how many were break even, or win percentage. That just becomes how many times you won versus how many times you lost. Average win, so you track that, and you track if it was a win, how big that was, right? And then you average that out. Lose percentage, average loss, average trade, ends up, so that's an interesting one too, that over all of the trades, right, it ends up being, your average trade ends up being, and it's a helpful way to look at it too. So like at that point, if I know that my average trade, every trade that I take, on average I make $20, and you go, okay, cool, well on average I'm going to make money every single trade, right? So again, a little mind shift there, a little mind bender. Right, so we got total profit, net profit. Yep, so that's there. So 70.45 minus the 277 equals 467. Account percentage. So again, not bad. That's after 30. How many days? How many trades do we take? So 38 days. I increased my account by 15%. So with a maximum drawdown of only 5%, which is actually really, really good. So yeah, so again, it's just an example of why this is so important, and how looking at the details and the data can really give you a good sense of what's happening and areas to improve on.